What's up, guys? Welcome back to another episode of Rawstocks. This is Rustic. Today we're going to be taking a look at some charts. We're going to look at where price came from, where price ended today, where price is likely to head tomorrow and into the rest of the week. Got a lot of big things coming up with the FOMC meeting coming to an end tomorrow. Fed Powell getting on the mic, running his mouth, seeing if we get a rate hike, if we get a rate cut, if we stick it to where we're currently at. We'll wait and see what happens after the FOMC meeting and the press conference. Before we get started by looking at the charts, don't forget to check out the links in the description below. Access to the Rawstocks trading Discord, which is free for membership. Premium section upgrade link if you want to join premium and get the Rawstocks options callouts. And some other links in the description below, as well as information on how to connect on social media. So first thing we're going to do is we're going to look at Tesla's chart today. We're going to be on the 1 hour charts today instead of the daily charts. Just get a little bit closer look and see what's going on. Yesterday we saw that nice rally up to a breaker block that we've been talking about, back to where the market structure shift originally occurred on the daily time frame. We sold off today, saw a little bit of rebound. What I'm anticipating that we're going to see tomorrow, whether that's before or after FOMC, is I anticipate we're going to dig a little bit deeper into this breaker block. I think we're going to head towards 180. That's my target. At 180, I think we're going to see a decision made. Maybe we push up to this trend line further into the breaker block. Maybe 180, that psychological level or that consequent encroachment of that breaker block, holds as resistance, and then we see price come back down and test the low or potentially fill this gap down here. I think 180 is going to be a little bit of a pivotal point. But if we rip right through that, we might see that trend line be resistance, come back down, test 180, and then see us push up higher through that. So that's really what I'm watching, is I'm watching how price reacts to this daily breaker block. Is it going to reject again, set a double top, right? Or like I said, I expect it to dig into the breaker block a little bit deeper, run a test on 180. Now that could be like a little bit of sell-off, prior to the FOMC the press conference launching. Sometimes we've seen that. Sometimes we've seen, early sell-off. Looks like it's going to be bearish. Fed Powell comes out, and then all of a sudden, the market goes ripping. We also have seen the exact opposite, right? We've also seen the market push up into FOMC press release, and then it peaks out, and then it instantly drops. Either way, I do expect the market to move once Jerome Powell comes out and starts talking. If we jump over to SPY, we took a couple of losses in the Discord today. No big deal. We'll make them up tomorrow. But we were trying to go short, and we just kind of saw this nice aggressive, rally on the 1 hour chart. You can also see it on lower time frames. We just kept pushing up and pushing up. On the 1 hour chart, we just set some fair value gaps. We never really came back down and tested them, and we pushed up. Now, you notice this line here between these two tops. We got it labeled as a SMT, right? Smart Money Tools. And what we want to look is we want to look at the comparison to QQQ in a second. We see that SPY pushed up to make a new high, pushed back over that trend line we've been looking at, tested the trend line, and chose to close above the trend line. You can see it's definitely flirting with this trend line, right? We also watch for Tuesday to be potential manipulation, and then Wednesday to be distribution. So are we looking for, right, we got a high here. Are we looking for price to continue up, right? Or are we looking for price to distribute down? If we start pushing up, we're likely to head towards this buy-side liquidity, right? We had a fail to deliver. We could deliver up to that buy-side liquidity of 518 and some change, 518.55, right? That would be sell side of the curve, buy side of the curve, right? At that point, I would expect that we would then see, possible rejection off 518.55 if we push up there. Now, the other option is that we end up starting to sell off. And if we do that, we're ultimately looking for price to come back down below the trend line, and then we'd be attacking, maybe the weekly lows. We also have a gap down here all the way down to 509.99 that has not been filled yet. So we'll be watching how price continues to react to this trend line and see if we can find any clues of whether to go short or long. Again, with the FOMC meeting, it can definitely be tricky to trade. So sometimes if you're not a experienced trader, I might sit on the sidelines until after the conference happens. Don't want to get caught upside down when the market moves aggressively against you. If we jump over to QQQ, though, we can see that QQQ set lower highs, or at least ended the day with lower highs, where, again, SPY set a higher high. So you can clearly see that QQQs are the weaker asset here. So it might be looking to short Qs if you were looking to go short instead of SPY. Might take a look at that. Just seems like the tech industry is struggling a little bit right now. We did see that gap get filled, so not necessarily a big reason to come back down. We did see on the 1 hour chart a bullish fair value gap that got laid today and did test and hold. And we did start to see a little bit of sell off on the 1 hour chart near the end of day. Now, what we could expect is if this high holds here and we get the lower high, right? We did get a higher low, failed to deliver on sell side, but we could start plugging down into this 1 hour fair value gap, and below that could look to target sell side liquidity. If we jump over to NVIDIA, NVIDIA, again, we saw a nice 1 hour bullish fair value gap, came back down and tested it, ended up, trading down a little bit near the end of the day into the afternoon session, just kind of created a little bit of a bull flag off of that rip, but we can still also see lower lows, right? Lower highs. So we got a high, lower high, lower high, lower high, series of lower highs. So although we saw that push up, I do think this is a little bit of manipulation heading into FOMC, and I'm still looking for this volume imbalance down here in the 835 to 822 range on NVIDIA. And so you can see we're in a little bit of a wedge pattern that's forming here, and we got this rejection block from 925 down to 901 that we've drawn back into. So again, expecting this high to hold, looking for price to come down into the volume imbalance. Take a look at AMD. AMD, we had price, wanting to see price come back up to this fair value gap. Looks like it might just completely fade down into that volume imbalance we saw. Definitely looking weak. Would expect to take out this consolidation range here at the minimum, and then see if it wants to target this daily imbalance. It's not a daily imbalance on the 1 hour, or it's not an imbalance on the 1 hour, but it is a daily imbalance on the daily chart. So watching for price to deliver down there. If it delivers down there, pretty fair that you could take a long position, 3 to 5 weeks out if you're an options trader, or if you're just looking to add shares of AMD. If we get down into this volume imbalance, preferably down to like 165, you could look to go long and target this 200 level fair value gap that we have still open. Jumping over to Meta. Meta doesn't look too bad. We did see, a nice reaction here on a double bottom. We saw price pop back up, failed to take the new high yet, but I wouldn't be so sure that we're not going to run up, try to test this 509 range at minimum, maybe take this high at the 501.50-ish area, right? Maybe we run on that liquidity before we dump lower, but this 1 hour fair value gap up here, it's a bearish fair value gap. It is suspect. Would be looking for, if price started to run, that it would run up in that direction, and then maybe we come back down and we take the sell side liquidity after that. We'll take a look at Amazon today. Amazon also doesn't look too bad. We had on today out of open, we had a nice big candle, left a nice big bullish fair value gap, came back down, didn't even get down into it, held and sent price a little bit higher. Closed with a nice, small but green candle. I would say Amazon looks decently strong, right? We took the sell side liquidity. We formed some structure. We're popping back up. Now, we haven't taken this high here, and we do have a large breakdown candle that we are probably going to run a test on. So if you are looking to long Amazon, I'd be looking for 177 potentially, maybe even a little bit higher, all the way up to 178.61. At that point in time, you could potentially take a short entry somewhere in this large fair value gap. I wouldn't take it below consequent encroachment. If you did measure the fib levels from top to bottom, I'd be looking for optimal trade entry. You can see optimal trade entry right here, 177, right? We can see our consequent encroachment right here at 177.42. Optimal trade entry, 177.61. And from that point, if you used your short and long tool, and we were looking for a short position at optimal trade entry, right? Depending on how far out your trade would be. Basically, you could look at the 2-to-1. This is a 2.42 to 1 risk reward ratio here. If you entered at optimal trade entry, ran your stop up at the previous high and targeted the previous low. Wouldn't be a bad trade. Again, that would probably be on an hour chart. That'd probably be at least 2, 3, 4 weeks out contract. That'd be taking that short on so that theta didn't kill you, and that move up wasn't too bad as well in case it ran just a little bit deeper. But also make sure to use your stop losses. That's what they're there for. Last thing we're going to look at is SMCI. SMCI was looking for price to run back up into that breaker block. On the 1 hour time frame. It's where we saw a market structure shift here, but it looks like it just continued to fade. Now we have seen some divergence set up, so we might pop back up, and if you're using your fib levels, we might pop back up to the 969 area, might pop all the way back up to 1024, right? Totally possible because of this divergence to set up, but we also could just fade. SMCI is not one of those that I particularly think is a strong, stock. I think it just went running out of nowhere, and I think a lot of people hopped on board, and I think you got bag holders up here who were looking for it to just continue to rip face, and it didn't, right? We also can see off that top to that low, we had optimal trade entry to go short, and what do we target? We target the previous low, right? We were not tracking this when this happened, but we target the previous low, then we start to target our fib levels. You can see it hits first target, next take profit. We got symmetrical swing at 819. We got 1.5 deviations at 717, and we got 2 full standard deviations at 614.88. Not expecting that to dump just all at once, but do expect that eventually we will come back down and take sell side liquidity at 692.85. Right, but first we got to kind of exhaust some of the internal liquidity. You can see we've taken it here. We've closed this fair value gap here. You can see we took the small internal liquidity there, and we got lots of little internal liquidity targets. So would expect us to start taking these out, seeing like minor reactions to them as we just dump, pop up, and I do expect eventually like I said, we will come back down, take that sell side liquidity. That will be a complete market maker buy to sell model right there. As it took all the sell side liquidity from that move. So hopefully that's been helpful for you guys. Appreciate all the support. Don't forget to smash a like, subscribe, share with all your friends. We'll be back on the next one, and see you guys in the live trading rooms.